Hey, good morning, all. Yesterday, not a bad day. Bounced back pretty well off of Wednesday's downturn, but I got to tell you, we're looking at some red again this morning. Dave and I will discuss that and more when he jumps on the line. But before he does, remember, there's only one thing that folks can control within your portfolio, and that's your risk. And if you don't really truly know how much risk you have in your portfolio, we need to talk. Give me a call at 863-382-0037, and let's walk through our financial x-ray. Hey, next, coming up with Dave.
5.7 FM, Ed Sheeran is there. They call me Morning Dave. We're at 8:40 now, 20 before 9. Time to check in on your money and see what Wall Street's doing to your IRA and your 401k today. To do that with detail, we always head down and talk to Phillip Statler from Statler Financial Services in Sebring. Phillip, good morning. How you doing today?
Hey, good morning, Dave. Doing well today. It's Friday. Guess what, Dave? It's the last Friday of January 2021, which means Monday when you and I talk, it's going to be February. Hard to believe already.
Monday, when we talk, it's going to be the day before Groundhog Day, and when we talk about coronavirus information, it really does feel like Groundhog Day, doesn't it?
Yeah, it does. It just keeps repeating itself, doesn't it?
Absolutely. Setting the table briefly because yesterday turned into a good day. Dow was up 300 points. S&P was up by 39, and the Standard & Poor, or the NASDAQ rather, was up by 66 yesterday. Boy, happy days are here again. Everything recovered until we got to the morning futures, right?
Yeah, that's the truth. I looked, and I will say though, when I first looked at them, we were giving it all back. We were giving everything we got yesterday. We were giving it all back. But today, now that I'm looking at it, it's improved somewhat. We're still down, but at least we're not giving back all of yesterday.
Well, thank heavens for small favors anyway. This is just one of those times in which the gossip about the vaccines, the gossip about the virus, the gossip about the rest of it just adds on to an occasional marginal earning report, and everybody goes gaga over it. Go through the coronavirus news itself because that's going to affect some of the issues. Johnson & Johnson said that their one-dose vaccine shows up as 66% effective, but the upside is it's a one-dose vaccine. There's some tidbits of news in Europe about the AstraZeneca vaccine that I hadn't heard yet.
Yeah, I this morning I saw that the Germany they have recommended that if you're 65 years or older, that you do not get the AstraZeneca vaccine because it's just not as effective as everything else. I mean, I saw numbers of 8 to 10% effective rate for those 65 years and older, and I'm trying to figure that out, Dave, because you know whether you're 65 or you're 50 or 40. I mean, the human anatomy is a human anatomy. So I'm trying to figure out, you know, what the difference is, why it's effective for younger people and not older people. That just doesn't really make a lot of sense to the financial guy.
Yeah, I mean, I noticed some changes in my body, but it wasn't like I turned into a different species when I went on Medicare. I'm not 100% sure I understand why it would be that big a change. Could you?
No, I really can't. And so, but you know, everybody's jockeying for position, and we'll just have to see because I guess they haven't even come to the United States yet to see what the CDC or the FDA thinks of the AstraZeneca vaccine.
Yeah, there's another one that's out there as well that's going to be trying to go to the FDA. At the moment, what we've got is the two that have pretty well been proven to have 90+% effectiveness rates in the Moderna and the Pfizer. And at the moment, anyway, be kind of nice to stick with those and get those better distributed.
Well, it would be, Dave, but you know, the other thing I would kick in here is that the more producers we have, if they have the same effective rate, you know, it doesn't seem like Moderna and Pfizer, at least, and maybe it's just a distribution, getting them distributed, but it's definitely some slowdown or they can't produce enough really to get it out there. So the more the merrier, as long as they're just as effective.
That's the big if. You know, when they get as effective. Right now, it's kind of interesting. Your point about availability. I've been following a graph of virus dose availabilities now. And it was funny, right around the 19th or the 20th of January, when the Trump administration announced that they were going to dump whatever they had all back onto the market, stop holding things back for second doses, we had a great big bump in available doses. For the last couple of weeks, it's been back down and frittering around actually in lower numbers available than we had in early January. So, yeah, you're right. The supply chain ain't all that pretty on the two brands that we've got out there.
So, I more the merrier as long as they work and are just as effective. So we'll see. We'll keep hoping they plug along and get something else in here, so that maybe by the end of summer we can get the majority of folks vaccinated.
Hey, yep. Now, let's see. The other news item that's going on before we get to the earnings, and we are the meat of earnings season, it's still early, so that might not be the right term, but I got to ask, so has GameStop gotten big enough to get added to the Dow 30 yet?
It's you might think so, but they are still in the news. They dropped yesterday, but the drops yesterday were not necessarily because of supply and demand. It was more because a brokerage firm halted sales, and that was Robinhood. And a lot of people got angry at Robinhood, and I get it because you want to be able to buy and sell and have the freedom, but they have regulatory responsibility. And one of their responsibility is they have to keep a certain amount of capital available. And if people are in there buying stuff on margin, and that can eat away at their capital. And so they probably were in a hard pressed situation to protect themselves from the SEC and the regulators.
That's probably a pretty fair bet that a brokerage firm like Robinhood probably isn't going to have a lot of the accounts of the big money guys that sold it short that are getting scrod so big right now.
Well, that's true. That's true. You got the little guy out there trying to, he's trying to gamble his way up.
Yeah, and at the same time, my understanding is it's a whole lot basically of gamers that are also honked off at the short sell and decided they're getting back at the big guys as well.
Yeah, that's true. I mean, there seems to be some definitely that tendency, and it's not just towards GameStop. I'm guessing they're probably anti-Wall Street people because they're helping AMC, they're helping Bed Bath and Beyond. There's a lot. I mean, it's almost like anybody that's got a high level of shorts out there, they're starting to try to target those guys and push up the price.
More than I know, but I'm suspecting with the name Robinhood, your read is probably right that this tends toward being the anti-Wall Street investment banker. It's earnings season, and the stocks that really have value behind them are also reporting their quarterly earnings, and we're getting a mixed bag again, aren't we?
Yeah, we really are. I tried to pick out a couple household names that everybody would really recognize, and the first one's Caterpillar. They're the heavy equipment manufacturer, and they had a good quarter, which you would kind of expect because everybody's trying to get projects done while less people were on the roads, number one, and a lot of the construction in the commercial industry hasn't slowed down much at all. So they came in at $2.12 a share. They were expected to only make about $1.49. So revenue was basically in line with what was forecasted. And they've come out and said they're well positioned for the future, and they should emerge from this pandemic stronger than they were before. So they were kind of optimistic there. They closed up yesterday 2%, and they're up another 0.75% this morning.
Cool. I was wondering, they weren't on my big winner list after a positive report. I was wondering. That answers it. They just don't make the cut from my big winner list yet.
Yep, just not enough. So next we had Eli Lilly, the drug manufacturer. They beat by 40 cents a share, came in at $2.75. Revenue was ahead of the Wall Street expectations, and so that was good, and they were able to boost their sales by their diabetes drug as well as the launch of their COVID-19 antibody treatment. So they had some good things in the mill last quarter. They're trading up almost 4% this morning, and will open at a new 52-week high if they continue at this rate.
Cool. Lilly's one of the ones in the pharmaceutical industry that hasn't been into the scrum on the vaccine. They've been working on the antibody treatment, and I know it's gotten some good reports.
Well, and you think that's probably not a bad way of going. If you got something that works, it's definitely going to be in high demand right now.
Well, yeah, two bases of customers, the ones that don't want to get it and the ones that have it, and the antibody treatment works for the ones that have it.
Yeah, exactly. So, and that number's not dropping lately. So,
Yeah.
yeah. So then we had Honeywell. They're the electronics company. They do a lot of different things in the industrial area. They beat by 7 cents a share. Revenue was ahead of expectations also. They said 2020 was a challenging year, but they've made some improvements in their profit and sales, and they think it's going to continue this final 3 months. They are trading down this morning about 2%. Yeah, it's so this one. So this is good. Chevron. So Chevron, oil prices being down, they've gotten beat up lately. They did lose a penny a share, but that was not as good as expected. They're expected to make 7 cents a share. So they missed there. They missed on revenue also. Their margins have gotten squeezed. Their demand has gotten squeezed. So, they've kind of gotten squeezed across the board, and they're trading down 2% this morning.
I got to believe their outlook has to be good with the increase in oil prices, though, wouldn't you think?
Well, it could be. They didn't mention anything about that, but I don't know how much of the oil production they have in the federal lease lands. So that could be a negative.
Absolutely.
So I'm not sure, and the report didn't indicate.
All right, time for one more. Pick the best one.
All right, so I don't know if it's the best one, but it's an indicator anyway, and that's Visa. Visa came out and they beat by 14 cents a share, came in at $1.42. Revenue top Wall Street expectations, which gives you some indication maybe sales, were higher this last quarter than were expected. They benefited from, again, a surge of online shopping during the Christmas holiday season. Everybody was online and not in the store. So their payment volume was up 5%. And then they also announced a $5 billion stock buyback program. Not getting much out of all that though, Dave. They're trading up a little over 0.1% right now.
All right, big money, but did not move the needle much. I was wondering. I heard the tone in your voice, and I was wondering if they were the bad news exception after a good report from MasterCard yesterday. Resetting the table, it was an up day yesterday, 45 minutes before we hit into the trading today, Phillip. How close to the zero mark are we getting? I'm seeing recovery on my delayed quotes.
We're still pretty far away from breaking even. We've got the Dow down 0.5%. The S&P 500 down 1/3%, and the Nasdaq's down 0.4%. So, but we do have a little etch of green there in the Russell 2000, up about 0.4%. So a little unexpected there. And then on the commodity side, whoa, man, look at this. Silver up 6.3% this morning, Dave.
Wow.
Yeah, to 20. I don't know, man. $27.56 an ounce. Big move. Gold's moving up too, not near like that, but it's up 1.75% this morning to $1,873 an ounce. And then crude oil is down a little bit from where you and I talked yesterday, but up from the close by 0.9 to $52.80 a barrel.
We'll take that. Asian rim markets evidently looked at our update yesterday as being a zero-sum game because they were mostly off by a bit this morning. Europe generally, on balance, trading up this morning midway through their day. Sometimes we can explain why a stock is moving, Phillip. Sometimes we can't. And on the can't side of the fence, that's where you don't want to have your retirement account put at risk. Taking the risk out matters a lot, and I know you're good at doing that. How do I find you to accomplish that goal?
Absolutely, Dave. Risk is the one thing that folks can control. And if you don't know how much risk you have in your portfolio, it's a great time to get a second set of eyes to look at it and diagnose that for you. That's why we have our financial x-ray. Give us a call at 863-382-0037. That's 863-382-0037. Go to my website, statlerfinancial.com, where we've got our radio there and links to our calendar. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730.
Kind of like they used to say on the TV, he's everywhere, right?
It feels like it sometimes.
I got you. You have a great weekend, sir, and we'll catch you on Monday. Fair enough?
All right, man. You too. Talk to you later.
Thank you. It's 105.7 Light FM and Statler Financial Services. Phillip Statler.
Hey, everybody. Remember, risk. It's the one thing you can control, but you got to know how much you got in your portfolio. Again, let's sit down and look at it together and make that determination. Give me a call, 863-382-0037. Hey, last of January, I hope your January went well. I look forward to seeing you again on Monday, February 1st. Have a good one.